Douglas Ramsey is with us now for his assessment. We're going to get it from him on the financials, other groups as well during this earnings season. Doug is the director of research at the Leuthold Group. Its core fund has outperformed 96% of its competition in the past 5 years. Doug, so glad you could join us this morning. Given what we've seen yesterday from JP Chase, today from Citi and from Bank of America, what do you make of the financials for an investor?
The earnings look pretty strong to me, although keep in mind they're coming off a period a year ago where we were practically in the abyss. But, you know, I've been impressed. I do think you need to differentiate within the financial sector. You know, we do our work on an industry group basis, and what we're finding attractive right now from a quantitative perspective are the insurance stocks, life and health, property and casualty, multi-line all look attractive. They're all among our top 10 groups. The regional banks also look attractive. Where the numbers and our analysis doesn't look as good is with asset management oriented banks and the investment banking and brokerage sector. I mean, those are areas that, to my mind, really got overbuilt during the last boom, and we're not expecting an immediate rebound in those last two groups.
Doug, I heard you say you're making most of your decisions quantitatively. You're not looking perhaps as closely at fundamentals that maybe some other groups do. What are the metrics that are showing you that insurance is interesting right now?
The valuations, even though those stocks have come back dramatically from their lows first quarter of last year, valuations still look pretty attractive. A lot of them pay fairly healthy dividend yields. We also look at just the price action of those groups on a relative basis, and you know, relative to the market, they've been performing well. So it's really across the board strength. I mean, to rank as highly as those three groups do in our disciplines, it's pretty broad-based strength.
And to what extent are you looking at economic data as well? I mean, we've really seen a mixed bag this week, or again, are you just simply looking at price ratio?
It's really group-oriented fundamentals and group-oriented price action that feed into that model. As regards the economy, you know, I think, you know, certainly we went through sort of a soft patch in the second quarter. There's no doubt about that. But, you know, I think if you look at the noise and some of the economic data, you know, the weakness that we've seen in the past 2 or 3 months was nowhere near the type of weakness we saw periodically when we were coming out of the 01 recession or the 90-91 recession. It's very common to get these short-term lulls, and there are, you know, there's noise in the data. So I'm very far from the notion that, you know, the weakness that we saw in the second quarter could somehow unfold into a double dip later this year or into next year. That is not our expectation.
An optimistic view. Thanks very much, Douglas Ramsey, joining us there from Leuthold.